Hey folks, Vic here with your weekly trade video for the week ending Friday, July the 24th of 2020. And actually, as I'm speaking here, I'm going to just put up the links right here where we'd love to have you join us on social media. To get straight to the point, following 5 straight weeks of profitable trading, we had a lousy week of trading this past week. Okay, no getting around it, no faking it, no sugarcoating it. Nobody likes it, right? But it's trading and it happens. We don't, hide behind losing trades and pretend they didn't happen. That doesn't help anyone. So this is an important video. Having said that, nobody's account got destroyed or wiped out if they followed our risk management protocols. In this video, I'm going to show you some of our trades, and we'll have a look at exit strategies. They're really important, how we get out of trades, both for profit and for loss, either a full loss or in some cases a mitigated loss, and how these strategies are literally your lifeline to survival in the Forex markets. Okay, let's take a look. Okay, so when we talk about exits, there's basically 2 types. There's an exit for a loss or an exit for a gain. Okay, it could be just break even, but basically just those 2 types. And that's it. So first, let's take a look at how we use a stop loss, and I'll show you one of our full losing trades for illustration. And by the way, all of these trades I'm going to show you all set up the same way as so many of our very profitable trades. So, we're not going to be changing anything because of these losses. These are just for illustration and how we handle things. So, losses, probability losses are part of the game. So let's take a look at the screenshot for this one. This is on the Aussie Swiss pair, and let me go to the screenshots that Darko posts for our premium service members. And this was the setup very clearly. Price was down here. He's looking to sell them if and when it comes back up to here, which it did. The sell on this, it was on 20th of this month. Let's go to the chart here. Yeah, the sell was right here at 65.90. Okay, and the stop was above here. We needed a 25 pip stop, and there's just no chance to mitigate. This thing hit here, it reacted a little bit, but didn't really get showing anything real negative, so we didn't touch anything. And look at this, went straight up, stopped us out, no chance to mitigate. Full loss, 0.5% of our account. Pretty small. The next example is a mitigated loss, and it was on the, the Cable Kiwi. Oh, let's have a look at that. This one right here. Yeah, this was another, I'm going to show you the screenshot first. Let's go to our day trades over to here, and the Cable Kiwi was right here. Okay, you can see what happened. Now look, this is a daily chart over here, and this is a 1-hour chart. You can see that we had this level of resistance on the daily, and price was breaking above it. Darko's pointing that out right there. And here's our next opposing level where we can take some profit. On the 1-hour chart, here's that breakout on the daily that you see over in here. Breaks out, so we're just looking to buy this when it comes back. This is a really, really good looking setup in here. We've had some awesome trades doing just that. So this was it right here. This was the breakout. Price came back. Now look at the difference. Look at this blue candle. That's a nice reaction. That's just what we want to see. So instead of our risk down here, right? So the buy, just to back it up a bit, the buy was at 192.61. We had a 45 pip risk. The stop goes from here up to just under this blue candle, and it got stopped out. That was a 16 pip risk. A 16 pip loss, a mitigated loss. That the account lost just 0.18%. That's called taking a good loss. Let's look at profit, okay? Because this is, exiting for profit is equally important, very, very important. We want to maximize the reward compared to our risk. Right now, I'll show you a live trade. We are short the New Zealand Swissy pair, okay? This is a daily chart. You can see this level of support. And if I go down to the hourly chart, and before we do that, again, let's have a look at the screenshot that Darko posts. These are great. They make it so much easier for people to see visually what's going on. So here's that level on the daily chart I just showed you. Price breaks below it. Look at the hourly chart. You can see it here very clearly. This is our entry time frame. We're looking to sell it. Darko posts this way ahead of time. You're looking to sell it right here. Okay, and that was at 61.35, and it needed a 19 pip risk above here. Okay, good. So here it was. Here was the drop. Here was the sell right here. This was our initial stop loss. Now look at this reaction, and this reaction, and this reaction. This is perfect. So what we do is we move our stop down to here, above here, and now we can look at moving it down to above here. Basically, you're going to be at break even on this trade. You should be anyway, because this trade has this trade's been up more than our initial risk. So never would we allow a full loss on this trade here because of this price reaction. Okay, and now the target is really important. Our target on this is an opposing level on the daily chart. So in this case, it's way down here at around, I think it was around 75 or something like that. Yeah, 6070, call it 75. Now you're looking at a 3-to-1 reward risk profit. Consider this. The losses this week add up to over 2% of the account. But just one of these winning trades, like this one you see on the New Zealand Swissy, wipes them all out entirely. And look, I have no idea what's going to happen to this trade. It's not going to matter in the long run because we only need a few 2-to-1 reward risks or more. Okay? And that again will wipe out all of the multiple losses simply because we don't allow big losses. Can you see how terribly important it is to exit your trades properly? Trust me, it's everything. It's just everything. It's definitely one of the most important skills you need to learn in order to become a consistently profitable trader. So in closing, I know that some people might scoff at the fact that we recommend to never risk more than 0.5% of your account on any one trade. But when you have multiple losses, which you will have, you're going to be very thankful for the fact that the low risk allowance preserved your capital, right? So let's leave it at that. I really appreciate all of you listening in today. It's my hope that this video will help you in your own trading. And if you like this video, you would make my weekend by hitting the like button. See, it doesn't take much to really please me, all right? And of course, we'd love to have you subscribe to our channel. And when you do, be sure to click that little bell so that you'll be notified whenever we put out a new video. You guys have a great weekend. Thank you so much. Please stay safe.